In this video, I will be discussing the S&P 500, which I believe has made a significant top. I'll give an update on Apple, NVDA, Amazon, PG, as well as EURUSD and USDCAD. We are looking at the S&P E-mini futures chart, and what we can see here are time cycles. I have different colors for the different cycles at the very bottom. In pink is roughly a 7.5 month long cycle, which we are expecting to come to a bottom at the same time as we're expecting this blue cycle to trough. This blue cycle is about a little more than 2 months and is expected to trough around late May. It can definitely extend into June, which would line up better with the longer term cycle trough, but we often use these shorter term cycles to help identify the longer term cycle trough. On an even lower time frame, and I'll zoom in here for a moment, we have these yellow cycles which are roughly 1 month long. I don't give a lot of weight to these cycles, but I do keep track of them because they can be helpful in a few different ways, and I will discuss these cycles today actually. And finally, we have these 2-week cycles here in orange, which we will also be discussing today, and these are often the cycles I like to use to identify trade setups for the longer term cycles. Zooming back out for a moment so we can see this longer term cycle trough, we are looking for a top in this cycle, which would suggest, and if we look back, we can see the prior pink cycle, we typically get a reasonable sell-off into a significant trough for these longer term cycles. Now, I'm not suggesting we'll see this necessarily, but I do expect we are at the beginning of a significant pullback. The reasons why I believe that, well, there are several. First, I use the cycle troughs and peaks to identify where I should be using median lines. And in this case, I'm going from the prior blue cycle trough to the peak, which was a little difficult to discern, as I've discussed in prior videos. And then rather than go to where I have the current blue cycle trough, I actually gave it the benefit of the doubt and extended it out. And you'll see if I do put this on where I have the trough, we've clearly already broken below that, which is not a definitive sign that the peak is in. You can break below them. Usually it will happen later in a cycle, and then sometimes you grind along the bottom before you actually put in the peak. But we broke this really early, and so I tried to give this the benefit of the doubt in a couple of different ways. Putting it here, moving it further over, extending it roughly to where this yellow cycle trough would come in. And even as I continue to move it over, we continue to just break below it, which to me suggests this is no longer a relevant median line set. So that's strike one for the bulls. Strike two would be the lower time frames here, these 2-week cycles. We often want to see each 2-week cycle trough continue to come in at a higher level to confirm that the uptrend is still intact. As I discussed in the prior video, the 2-week cycles have been a bit less consistent as of lately, but that's okay. If we take a measurement, this first trough that I have is 11 days, which is a little short. And so if we were to put the 2-week cycle trough here, and I do have it here, we have already broken that, which would suggest that the next longer cycle, in this case the 1 month, that cycle peak would be in. That would not necessarily suggest that the 2-month long cycle peak is in, but that's definitely another warning sign. Even if we were to say, with the inconsistency of these lower time frame cycles, that this particular cycle extended to 20 days, which would be a very long 2-week cycle, well, we've still broken below that potential trough, suggesting again that at least for this 1 month long cycle, that particular top is in. Let's take a look at those month-long cycles. I don't talk about them all too often because they're not the most reliable and they're not the most relevant for trading purposes, but like I said before, they can be useful. So in this particular case, it came in very early with the 2-week cycle, but then you can see clearly something was happening during this 2-week cycle there was muted upside, and that was because of this month-long cycle. And then when that troughed, the strength returned, and that also helped identify the longer-term blue trough in this case as well for the next month-long cycle. And you can see that again, these line up pretty well. Came in a little early here, that's fine. But we use this to help us identify this very muted trough for this blue cycle as well. So we can also see that these yellow cycles do often give us a good bounce as well. Not all the time, but sometimes. So we could see a nice little bounce out of here. It's possible. We might not get anything. Again, these yellow cycles, they're not my favorite to use. They're just for an extra confirmation or to get some extra information when sometimes things are a little uncertain. However, even if we do get a nice little bounce because of this 1 month cycle trough, where I currently have the 1 month cycle trough beginning, well, we've already taken out that low. And now, despite the fact that there's a little bit of uncertainty with where this blue trough might go, as I've mentioned in prior videos, it could actually go over here. That would be possible. I still feel really confident about placing the 1 month cycle trough here because we get a sudden burst of bullish momentum, and that would not likely only be because of a 2 week cycle trough. That would very likely be because of a longer term cycle trough, in this case that 1 month cycle trough. And so we have taken out that low, and by taking out that low, that is very indicative that the next longer term cycle, the 2 month blue cycle peak, is already in. Considering that information, I have entered a few short positions now on the SPX. Let's take a look at the SPX chart right now, and I'll show you the targets for this expected correction. This is the SPX daily chart, and I'm actually going to clean this up a little bit. Just another reason why I think it's likely the top is in is we have broken these trend lines. Now, similar to what I mentioned before with the median lines, when you break below them, you can ultimately come back, retest them, and even grind higher and make a new high. But this is just one more consideration that suggests the top is likely in already. Let's break these because I don't really think they're relevant anymore. And now we're going to zoom out a bit. And so what we're looking at are a variety of different median lines based on different time cycles. These are all peaks and troughs from various time cycles that I have, and I've discussed most of them in prior videos, if not all of them in prior videos. I also have a date marked on here, May 28th. This exact date is not necessarily relevant, but this is roughly around the area of where I'm expecting the next significant trough to come in, the trough for the pink cycle as well as the blue cycle. So we'll start long term and move our way to short term. In the long term, I have this modified Schiff median line set. I often like to use modified Schiff median lines for longer term cycles. And in this case, you can see we have achieved the target. And when we did achieve the target, we immediately found rejection from the median line. We tested it again, and then we actually gapped up above it. And now here we are, we've actually just back tested it. I expect we're going to break below it as we move down into this area here. But before we get to that, the next longer term median line set is a standard median line set, and this is for the last pink cycle. And so you can see, very similarly, we moved straight up to the median line. We found some resistance. Not exactly resistance, but we just hit the target and we grinded along it before breaking above it, back testing it once, back testing it twice, before moving higher. Then finally, we have this other median line set on here, which I will remove just for a moment so you can see clearly these other median lines that I've been discussing. And now this one is different. This one, I'll go back, we'll put that back on, begins here at the prior pink cycle high to the current pink cycle initial trough to what I believe to be the current pink cycle high. And this is exactly how we find a target for the correction. And it gives us this median line here. We don't have to hit this median line. We can come near it. We can go beyond it. Sometimes they're actually not effective at all, and we don't come anywhere near it. But I do expect because we will achieve it because most times we at least come very close to it. What you'll notice about this and the expected trough time zone is it lines up with the lower warning line of the prior median line set for the pink cycle. Additionally, if I add the half line for the longer term median line set, the modified SHIF, that also intersects all in the same area. And many times when you get these intersecting upper warning lines and median lines, or median line and median line, when I say median line, I mean the actual median line, they often act as a magnet and pull price towards it and make for a good target area. And these all happen to intersect right around the expected trough time zone, which adds another element as to why I believe this to be a very good target. And then, of course, finally, if we just look at this area, looking left, hey, where is that? That is around the prior all-time high area. So I'm looking really around 47.50, somewhere around there as a good target for the next cycle trough. I'm going to move back over to the prior pink cycle correction just for a moment to show how the median lines work. Just to confirm this particular pink cycle trough came in a bit early, but you can see the high, the low, the high. And so I'm going to do this on the SPX, high, low, high. We'll put a median line set on there. It's not going to be, well, maybe I will get it perfect. We high, low, high. We get our target. We came right to the median line. We actually ultimately ended up going beyond it later before putting in the true bottom, but you can see how this is a great target. And this one also happens to line up pretty much with the prior high of the prior pink cycle. It does not always work out that way, but it's nice when it does because it just gives you another confluence, another reason to believe, hey, we're probably going to retest this high at some point. And that also lines up with the corrective median line set. So I will go ahead and I will put this one back on here, and this will stay on here until either we break above and make a new high, or until we put in this expected trough over here. The major benefit for identifying a trough time and price, well, obviously that's ideal for any trading strategy that you want to use, but with options it makes it a lot easier to figure out the best way, the most efficient way to structure your trade, whether that's going with far out of the money spreads or puts to get a significant risk to reward ratio, or if you want to be a little more conservative, how you can sell maybe at the money calls or something along those lines, and how much time roughly you should put on those so you can extract the most from the credit that you receive for those. I have actually done both of those things. I've sold at the money calls with an expiration of around this time frame. I have also opened some far out of the money put spreads, which I gave a little more time. I went out to, I believe, the second week of June for those, where I'm giving myself the opportunity to make 5-to-1, even if it does not necessarily achieve this target. So time cycles and median lines can help you identify some extremely good risk to reward setups that you might not otherwise get if you just think, oh, the top is in, I'm going to buy some puts. They're expensive right now, and then even if you achieve this target, yeah, sure, maybe you'll still make 150%, something like that, but not 500% like you can if you can pinpoint a specific time and price that you are expecting price to achieve. This is the NVIDIA daily chart. I'm just going to talk about this really quickly. I took about a 40-something% loss on the trade I had discussed in the prior video, which was fine. The Amazon trade worked out, as well as the PG and the FX trades that I had discussed in that video as well. When NVIDIA had broken below, I no longer have it on here, but when it had broken and closed below the median line set that I had on here for what I anticipated to be the new cycle, I closed that out. And now I believe it's very possible we're going to have a negative blue cycle to line up with this longer term pink cycle, and which should also line up with this even longer term pink cycle, which also happens to line up with the expected negative momentum in the market from a timing standpoint. This is the Amazon daily chart, and as you can see, we have held the lower warning line. I'm just going to I'll go to the 1 hour really quickly. We have held the lower warning line, not just the lower warning line, but I added a quarter line to the outside, which I had put on prior to entering that trade, and that continued to hold. And as I had discussed as a potential target where I wanted to take it off was 185.36. When we opened on Thursday the 4th, the options were going to expire the next day, and they were far enough in the money where I took a nice profit and I just closed them right at the open, and I'm glad I did. Granted, I'm asleep when this happens, but had I woken up the next morning and price was opening at 182.32, yeah, those still would have been profitable for me, but I would have been kicking myself for not closing them here. If we go back to the daily chart, I do anticipate it's possible we achieve this upper warning line. There are a few of the tech stocks which are super bullish right now, but considering they're also, for the most part, not all of them, but for the most part, lining up with significant troughs around the same time the broader market is, I do expect them to at least slow down significantly, possibly put in some significant corrections with the broader market as well. This is the Apple daily chart, and I know this is a bit messy here. I had discussed in prior videos how I had opened puts as well as put spreads. I actually closed the puts prior to CPI, and they were about break even. I did leave the spreads open. I still have those, despite the fact that we broke above this upper warning line, and I'll actually remove this for right now. I'm not all that concerned. I'm going to put the SMAs on, and in blue, this is the 50 SMA. We rejected from it. I actually added those puts back on here once we reached the 50 SMA, because in addition to the 50 SMA, we have significant resistance right here. We are expecting a lower low because the month-long cycle here already broke below the initial blue cycle, which is about 2 months. It already broke below that trough. And so if we look at the month-long cycles, and this was another reason why I closed the put, because for Apple, unlike for the broader market, for the S&P, the monthly cycles for Apple are usually pretty good. We tend to get pretty significant bounces out of these, but if we look at this last, actually this is 2 cycles ago, we're gonna look at the last 2 blue cycles here. We did, and this was in an up cycle, we bounced, but then we ultimately broke below that low. And then we did the same thing in the last blue cycle. If we're looking at the yellow cycles, we broke below, and then we had a very nice bounce before we still ultimately made a lower low. And I'm expecting something like that in this trough, as again, we're expecting the broader market to correct. Now, because of earnings coming up, I'm not exactly sure how I'm going to trade this. If we are moving down again and those new puts that I bought are in the money, a fair amount, I'll probably close those out and hang on to the spreads, just like I kind of did over here. But exactly how I'm going to play that depends on what kind of movement we do or don't get before earnings. However, I don't really want to hold those through earnings if I can avoid it. And the same is true for PG. I know this is a very busy chart. As I had discussed in the prior video, I was looking for a week-long cycle to break. We did break it here. I entered my first short here, only to be a little disappointed when it turns out the longer-term orange cycle was actually shifted over by 1, which that's not unusual. I held on to those. I wanted to see if we would hold this resistance here. We did, and then when we broke below again, I added another position, which I have since closed one of those positions. I did the same thing with Apple. I had a put position as well as a put spread position. I closed the puts for the same reason I closed them before CPI. So that was, I believe, on Monday. But I still have the put spread. Unlike with Apple, I did not add another position here because we are closer to earnings, and I'll probably look to close the put spread prior to earnings. And it is possible, since the last pink cycle here came in early, it is definitely possible that this one comes in late by about an orange cycle. Oh, I already have one there, by about an orange cycle, and that would also line up with the broader market correction. And we do have, I'll take some of these off for right now. We do have, this is a corrective median line set, and as you can see, we came to pretty close to the median line before we rejected. I know this looks a little funny, and that's because this is in a down cycle, so it's trough, peak, trough, median line, or pretty close, and rejected. Let's take that off. So this is the longer term target I have for the pink cycle, and it's possible that We even get a bounce after earnings, but then ultimately still make a lower low and trough somewhere around here with the broader market before potentially holding this longer term median line set. So if you've been looking at some of these median line sets, you'll see that we actually, even looking into the future at the expected trough zone of the pink cycle for the S&P, we already can see some potential good long setups coming in that time frame. This is the Euro USD daily chart, and as you can see, this is the Euro short setup I had discussed last time. I had actually entered it all the way back here, I believe on Friday, March 22nd, and this sliding parallel held, barely had it closed above on this particular day. I would have closed it for a loss, and then I would have been very disappointed to see this. However, while this is the target, I actually closed this on Friday considering our proximity to the expected blue cycle trough. I thought it was possible that maybe we would not achieve this target. Maybe we would just find support at this median line set as we did over here as well. So I closed this out, but it was still about a 1.69 to 1. And now I will be looking for the bounce to potentially go long out of this. And the other trade was USDCAD, which I had mentioned was not looking as strong as USDJPY because USDJPY had a much stronger bounce out of the blue cycle trough, as well as USDCHF, which also did. But I had mentioned that I took the USDCAD trade just because it had a better setup with the median lines, even though it was looking a lot weaker, and now it is looking stronger than the other two. And so this one is working out very well. I have moved the stop up. It was originally below this low over here. I've moved it up to here. I'm going to move it up to right here next, below this low. And after we put in this particular trough, I'll probably just move it to break even, maybe a little above break even, as I look for it to reach for this median line moving up here. As always, thank you for watching this video, and be sure to subscribe for more.